Good afternoon, everybody. Welcome back to my channel. It is me, the Millennial Investor, 1914. Holla at yo boy. I'm back with this content, this investing content. We here to make money. We here to create generational wealth, and we here to not only pass some money for ourselves, but for our families and to our legacy. And if you rock with me, make sure you like and subscribe to my channel, share my content, and let's dive right in. As you guys all know, I am a uh, I'm an investor. I am not a trader. I invest for the long haul. I invest for when I buy a stock to hold it for 5, 10 plus years. Stocks that I rock with. I talk a lot about dividend growth stocks, dividend growth investing, yield on cost. These terms that you throw out. In this video, we're going to talk about the 5 reasons to become a dividend growth investor. If you want to know why you should be a dividend growth investor outside of just, passive income, then let's dig in, right? Number one, the reason why you should be a dividend growth investor is because dividends are a major source of long-term market returns. As you see in this graph right here, in this graph, it has uh, it talks about the dividends contribution to total return by decade. It goes from 1940s all the way to the 2000s, and then even have a cumulative of 1930 to 2017. What you see here, the blue is no dividends. The yellow is where the SP 500 dividend contribution to total return. What you'll see is that in the yellow, the orange, there's been decades where there's been a like a lost decade. Inflation is crazy. So what you see is that dividends that a company pays is pivotal to a lot of the total returns that we receive on a year-to-year basis. On top of the price appreciation, it's the price appreciation of the stock, but then it's also the dividend that they pay as well that combines to total return. The second reason for you guys to become a dividend growth investor is because dividend growth stocks have outperformed the stock market over time. So a lot of times with individuals, when they look into dividend growth companies, they look into the dividend aristocrats, the dividend contenders, even the dividend kings. When you first get started, dividend growth investing, those are the class of stocks that a lot of people are super excited, right? Like, oh, I got like 5 dividend kings, I got like 5 dividend aristocrats. The reason why is because the dividend growth companies tend to outperform like growth companies that don't pay a dividend, and then just the stock market in general. Which see right here, uh, compared to there's a chart. So compared to uh, everything right here, equally weighted S&P 500 index, stocks that have cut their dividends, stocks that don't pay a dividend, uh, dividend payers. The stocks that tend to do the best are dividend growth and dividend this year. So stocks that initiated dividend last year was Google, Meta, and then stocks that have been growing their dividend aristocrats, contenders, and kings. I'm reiterating that. Make sure you take notes, and those are the stocks that a lot of people pay attention to. Dividend aristocrats, dividend contenders, dividend kings. 3. The third reason why you should be a dividend growth investor is because dividend growth stocks can help ensure a safe retirement no matter how long you live. I recently made a video. A video. I don't know when you guys are gonna see it because I'm thinking about probably dropping it tomorrow. Because today, look, today's football, and so I'm thinking about just dropping it tomorrow and just focus on football today. Hey, so but in the video, what I stated is that because I made a video on dividend growth investing versus the 4% rule, and it was just this that when you think about the 4% rule, you got to think about a sequence of return risk. When you have a dividend growth portfolio, uh, it will ensure a safe retirement no matter how long you live, because it's paying you passive income. It's paying you passive income. So yeah, that's why. And so you have a portfolio that's like 1.5 million paying you 30,000, or 2.5 million paying you 50 to over 60,000, and you not be able to have uh, to sell your stocks. Compared to the 4% rule, you can have a $1.5 million portfolio, but you're actually selling your assets. And a lot of times, when you are the one that's being the one that's selling assets and trying to live off of, it can be quite scary because you're the one that's in the driver's seat of your own portfolios. Here we go. The fourth reason to be a dividend growth investor is embracing a dividend growth investor's mindset can help you avoid the biggest cause of market performance, which is your emotions. The reason why, when you see here, is that here's the stock market ups and downs throughout the year. You'll see that a couple of days ago, before the CPI data, the market was down red. It was complete fear. Then it's greed now. Then it was fear beforehand, because the stock market didn't know who was going to be the president. Then it was Trump, complete greed. And then a couple of days later, the market came down. So when you are growth investing, your portfolio goes up a lot, but at the same time, just as high and just as possible for your portfolio to actually um, increase. It can increase a lot. It can also decrease a lot as well. And the biggest, I'll say, negative con against us, anybody investing, is your emotions. It's being able to have high conviction in whatever you're investing, and basically just sticking with it. If you like Microsoft, or you have a stock like AbbVie or Visa, and you seeing bad news, bad coverage, it's up to you for you to now make sure you don't lose too much money overall over the years, but have that high conviction to stay with your play no matter what, even when your heart and your head's telling you sell, 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 or sell all your stocks, get out, get out, get out. You got to have rocks solid fortitude to stick with your guns, with your investments. 5, the last reason why you should be a dividend growth investor is because being a dividend growth investor can help you earn a rate of return no matter what the stock price is doing. This kind of correlates with the first point, where it showed the graph of over the decades of certain the SP 500 producing a certain rate of return, and it was and then the yellow part was the dividends. This is what it's saying, that what you don't have to worry about is that when it's times when the market goes down, when the market goes down, you can it goes down, or when there's a negative, any negative year, negative month, the dividend can help bridge the gap for you in regards to total return. Remember, total return is a price return plus the dividend. So that dividend portion really does help. And then also when you do DRIP, dividend reinvestment program, you when your dividends are buying back at a lower price, higher price, dollar cost average. But the times where when the market is down and your dividend is buying at a lower price, you're getting more shares at that lower price. Then eventually, maybe 6 months, a year, 5 months, when the market goes up and when your investments goes up, your portfolio is going to go up because of all the dividends that bought said stock or stocks at a lower price. Lastly, the reason why you should be a dividend growth investor is because me, your commander, is a dividend growth investor. Hey, let's get it, yeah. But yeah, I'm a dividend growth investor. I've been successful, and might as well, walk as you preach or talk as you preach, or I forgot the saying, where I walk it as I talk it. I walk it as I talk it. I lived, I learned, I made mistakes, and that's the videos that I'm trying to make, just so that wisdom is when you hear other people's stories, other people's mistakes, and you don't make that said mistake. That is wisdom. So hopefully you guys take these videos, these lessons of why you should do certain things or why you shouldn't do certain things, so that if you do it, then it's up to you. But I love my dividend growth portfolio. I love my strategy. I love receiving that dividend. I love total return. Now that I'm 35, 36, going into my 40s now, I prioritize total return and income. Beforehand, it was just dividend growth stocks and whatnot. Now, I want, for me, I want income, pay bills. I want money, pay bills. So that's why I have income plays like JetQ. But I also want my portfolio to grow. I want my portfolio to grow to I want my portfolio to grow 14, 50%. That's why I have ETFs and different stocks along the way. So uh the caveat 5.56 reason why you should be a dividend growth investor, because me, your Lord Commander, is the dividend growth investor. I've been doing well, and if I'm doing well and I'm not seeing anything special, you could do well as well. So make sure you like and subscribe to my channel. That's the 5 reasons why you should be a dividend growth investor. And make sure you enjoy your Saturday, Sunday, Monday, whatever day you viewing me. And shout out to football. Peace.